All right, welcome back to the new weekly outlook. This is going to be a really fun week because we're headed into what we call a global rates week. So this might also be one of the most important weeks of the quarter as well. We have 36-hour blitz of central bank decisions, starting off with Bank of Canada on Wednesday. A few hours after that, it's going to be the Federal Reserve, and then we have Bank of England the following day, and then we end off the week with Bank of Japan. So let's start off with the bigger picture here first. Let's start off with the Fed. We know for sure that a quarter point reduction is going to happen, and there are some talks about potentially 50 base point cuts, but that is still a very long shot. Beyond that, traders are betting on more cuts through 2025 and going into early 2026, and that sentiment has really what's driven the treasury yields to their lowest in months, S&P 500, NASDAQ, and US 30 to their record highs, and made the dollar even weaker. But here's the risk. If Powell and the Fed signal that the markets are getting ahead of themselves, then that entire setup will get weaker. And inflation is still sticky above target, tariffs are still working their way into prices, and the Fed may not want to greenlight the quote-unquote easy money through 2026 story. So on Wednesday, Powell's tone, the dot plot, and the vote split is where the volatility is going to come in from. Then continuing on to Bank of Canada, we're expecting that they're going to cut again. Canada's economy has been soft. Inflation is towards back the target. So it really fits the entire global theme of policy easing momentum. And then moving on to Bank of Japan to end off the week, we are going to have them pretty much holding out the interest rates because with Ishiba stepping down as prime minister and the Japanese politics in a flux, the BOJ isn't really under any pressure to move at the moment. But whoever ends up taking leadership in Japan next could lean more towards the fiscal spending, which means that the yen stays soft and the Japanese government bond curve keeps steepening. And then for the UK, we're also expecting that they're going to maintain those interest rates because they've already cut in August with the split vote. And right now, the focus is going to be more on how aggressive Bank of England remains with their bond runoff program. The UK politics are also still in a mess, which only adds more pressure and guilt. Then we have economic data that's coming out that we're going to be paying attention to. On Tuesday, we have core retail sales coming out from the US and CPI data coming out from Canada. Other than that, and earlier in the week, so today and tomorrow, it's all yellow and orange folders that I'm not really worried about too much. Tuesday really is when things pick up with the red folders with the retail sales and CPI. CPI coming out from the UK as well in pre-London session. And then Wednesday, you have interest rates really kicking off with Bank of Canada, the Federal Reserve. If you're trading the Aussie dollar, then Asian session, you have employment data coming out from there as well. Thursday, you have interest rates coming out from Bank of England, expecting them to maintain. And then unemployment claims from the US as every Thursday, and we're expecting another drop here. And then Friday Asian session really is where we're going to have interest rates coming out from Bank of Japan to end off the week. All right, now let's go ahead and move over to the technical side and see what kind of technical setups we're looking at. Starting off with US 30, we have the weekly time frame, quite bullish, have finally broken out of this multi-week record highs up top here at 45,000, creating new record highs at the moment. What I'm going to do is mark off this previous support area right here, which is a current support, the previous resistance at 45,600. And we're going to adjust this as we drop down to lower time frames as well when we start to see more cleaner candle body closures. And then top wick rejection from last week at 46,200. All right, coming on to the daily time frame, I'm going to adjust this a little bit higher where these candle bodies are closing. And we'll call it 45,700. So as long as price can hold on to a support here, we're looking for price to come back up, those buying opportunities leading into Wednesday, back into 46,200. If price fails to do that, we simply make a top wick and then push back down. Then on intraday, so looking at scalps or day trades, we're looking for sales to come back into 45,700. And then if price continues pushing below that, and we're headed back into this daily consolidation, Then I'm targeting 45,200. Come on to the 4-hour time frame. Price push back up. We made a top wick rejection right here into 46,200, but I'm going to adjust this to the actual candle body closures, which is going to be 46,100. Quick little fake out, price pushes back down. After that, we see a ton of volume to the downside. So if price can simply make a top wick and then push back down, that's a quick scalping opportunity here, coming back into 45,700. And then if price establishes a support somewhere around here and then push back up, I'm looking for a range to range trade from 45,700 up to 46,100. And that move is really going to happen based off of the market sentiment of those rate cuts, of course, which we know are going to happen for sure, but also any sort of positive sentiment or positive news or language around seeing more rate cuts going into the end of the year, maybe another 1 or 2 rate cuts, or even into early 2026. Yeah, so I need to first see those confirmations based off of at the bare minimum, the 4-hour time frame, as the week has just started forming, the weekly candle. We come over to JPY. Seems like price is respecting the current resistance, 1.356. Again, levels are going to be adjusted as we drop down to lower time frames. All right, so when I come onto the daily time frame, I start to see how this level was respected as support here. And then when we look at the more recent price action, same thing, bottom wick rejection, push back up. One level that I'm going to adjust is going to be this resistance to sit right on top of these candle body closures based off of the daily time frame. And right within that, I see all this consolidation. So another scenario of a potential zone to zone trade. Got 1.358. And then I'm also going to create a zone here based off of this previous daily high right here. So if I'm going to look for sells, I want price to break its own daily low, that bottom wick that it's formed. And then that way I can look for those clean sells to come back down into 1.35 area. Anytime price rejects the zone, it seems like it pushes right back down very clean into 1.35, and then potential continuation if it doesn't have enough bullish volume to the upside. Come on to the 4-hour time frame. We rejected into 1.358 at that resistance last week. We pushed back down right below this zone into this previous area of support, it seems like. So that would be the first target if I was scalping this, where if price can break its own daily low, that's the first scalp opportunity that I would look for as a partial, and then let my trade continue down and run into 1.35. And there's even more potential scaling opportunities after price breaks below the support right here. If price establishes a resistance right here or support right here, then we're looking for that trade to come back into that resistance of 1.358. And these are all short-term trades. So I'm talking about like scalps, even day trades, as the London session or the New York Stock Exchange opens up. Nothing setting up on the hourly just yet. Now we're looking at Euro USD, quite similar structure as GBP USD. Yeah, I think 1.173 is fine. And then we're going to adjust that when we drop down to lower time frames anyways. And then I'm going to mark off my support on the weekly time frame right here because I want to see what happens here on the daily time frame within this zone. All right, so looking at the daily time frame, we maintained this bullish structure to the upside, and then price kept tapping out at 1.173 area, pulled back down into the support. Really about September 8th is really when we got a candle closure above this, and then the following candle just brought us right back down, and then which was last week, and then we try to push back above this area once again. And Friday is really where we closed above this actual resistance. I want to see if we're simply going to make a top wick and then push back down. If so, this is going to be my first target here, so 1.169 area as my first TP, partials, etc. And then if price breaks below that, then we're potentially testing this bullish structure and looking for a continuation back down. That's going to happen if the euro weakens against the dollar or the dollar gains more strength when interest rates come out or retail sales comes out or anything that's happening on the macro front. Drop down to the 4-hour time frame, and it seems like we are holding out some sort of a resistance here. So if I'm going to look for buys, I'm going to wait for price to break above this. So establish a support somewhere here, break above that zone, and then look for those buying opportunities to come back and revisit this previous high here. But once again, it does seem like this is a very strong zone overall between 1.173 and this zone that we just created. So if price doesn't break past that, then we don't have any buying opportunities. And if it just maintains in this area, then again, you don't have any sells just yet either. So I'm really going to wait for price to break below this, with this area being my first partial, and then a continuation down, target another couple of pips down here. And that's going to be more of a conservative trade as we're going into Tuesday's retail sales and then even Wednesday's interest rates coming out, because this is a very, I wouldn't say it's a very high probability setup. What we're looking at is more of a zone to zone trade and more of a consolidation until we get a cleaner direction on where we're headed long term based off of the daily time frame and weekly time frame as we're getting closer to the actual interest rate release. So in those type of scenarios, especially a week like this, I would, if I'm risking 2% normally, I'm going to come in with a 1% risk in the beginning of the week and then scale into my opportunities as I see more volume kicking in. All right, looking at GJ. Last week, we also had a gap up here. The market filled that in with the bottom wick rejection, and then we closed bullish, but quite weak volume at the moment. So what I'm going to do is mark off the top wick rejections, which sits very cleanly right on that resistance here to the left, which is going to be 200.5. Again, will be adjusted as we drop down to lower time frames. And then I'm going to mark off that resistance right here. I want to see what happens in between here, especially what happened last week, which is 199.6. All right, so when we look at the daily time frame, that seems to be the resistance for all this consolidation right here. Before that massive sell-off happened, we held on to a very strong support here, which seems to be a liquidity grab given the volume, where we were able to break the previous high, pull back into the same exact consolidation area here, consolidate once again, and then really have that momentum to the upside about mid last week, breaking the previous highs, barely holding on to that resistance or really breaking past that, but simply rejected the 200.5 and then made a top wick rejection. The new daily candle just started forming. We've already made a bit of a top wick here. So I want to look for any buying opportunities above the 200.5, because when I zoom out and then I look to the left, this is clean price action here on the daily time frame to really head back up into 203.1. So we have really good buying opportunities to the upside as long as we have the fundamental catalyst to take us all the way up top there, which could end up being either the Bank of England interest rates or Bank of Japan, but for both of them, we're expecting them to really maintain it. So unless they really surprise us with the language or the actual interest rates, I'm not really expecting price to move too heavily before the actual interest rates come out. Let's drop down to the 4-hour. Nice top wick rejection, pushes back down, holds on to this resistance here. And then this new 4-hour candle, this is where the market closed out on Friday. We gapped down, we filled in that gap, made a top wick rejection, and we're kind of just hanging around this resistance at the moment. So really no trading opportunity just yet. Even if I'm looking for scalping opportunities, right now I would only see a sell setup if price can break these lows, and then we have those clean sells coming back into 199.6. If not, I'm going to wait for price to finish consolidating here and then break above 200.5 for any buys. So once again, any sells below the zone, push back down into 199.6. Any buys would be above 200.5. USD JPY has been sitting in a very nasty consolidation for multiple weeks now. I'm going to mark off that weekly support, which is 146.8. The resistance from last week at 148.2. Come on to the daily time frame, and I start to see that daily consolidation a lot more clean and a lot more clearly now. And so if I'm looking for any short-term trades, I want price to break outside of this daily consolidation, this core consolidation. So break above this and then look for a trade coming up into 148.2, even potentially 148.5 right up top here. And then we're looking for a zone-to-zone trade. So we're still waiting on the catalyst from the fundamental aspect. Anything that's happening on the macro front, that would really give us a clean direction of where we're headed when it comes to the US dollar against the yen. drop down to the 4-hour, and that zone still being respected as resistance. Price pushes back down. This is the new 4-hour candle open and even the new weekly candle open where we start to see a bit of a top wick. So nothing here just yet, and no sells either unless price can flip and break its own low and then pushes back down. And then we're looking for sells to come back down into 146.8. So any buys would be above the zone, a quick trade up into 148.2, and then longer term buy opportunity, so like turning your scalp into a day trade, above that to come back into 148 point almost 8, and then you have clean price action here to the left to really carry you up top here. Those are your buys. For sells, you wait for price to break its own low and then pushes back down and then comes back and taps into this daily support of 146.8. Let's cover Euro JPY today as well. So here the main catalyst is really going to be Bank of Japan's interest rates, because ECB already released their interest rates and they maintain them. And I'm going to mark off this right here at 172.8. Come on to the daily. Any adjustments that need to be made. I'm going to bring this a little bit higher so it sits right on top of these candle bodies on the daily time frame at 173. So if price breaks below that, then we're headed back down into the support. So I can target 172.4, let's say, as the next target after 173. And then if price breaks even lower than that, then we're looking for further sell opportunities to come back down into the support area. But as you can see with the previous daily candle on Friday, we closed right here, and then today we gapped up a bit. So this could simply just be a gap fill, and then price could flip back up and push back up bullish. Drop to the 4-hour. So these are just quick scalping opportunities here, nothing long-term here just yet, unless price can break above 173.7 or below 173. So I'm really not going to be entertaining this pair until price breaks one of these two levels here. Those are just super tight zones, and other pairs have much better setups instead. Gold, once again, tapping into a new all-time high last week. 3675.3. Come on to the daily time frame. I'm going to mark off a daily support right here at 3625.6. And then I'm going to create a zone right at the resistance. So if the rally continues, then I'm going to look for buys above the zone and then come up for a wick fill at 3675.3. If not, we're looking for a zone to zone, some scalp, some day trade opportunities going into London session or even into New York session, coming back into 3625.6. And then if price breaks below that, then we're going to be breaking this daily consolidation, so we can look for those sells to come back down even deeper into, let's say, 3560, even a gap fill first of around 3580. So those are going to be my two target price levels before a further steeper pullback. But for that to happen, for anything to drop below really the support area of around 3560, we would need some more optimism taking in from a geopolitical front, which we don't have just yet. So there's a lot of geopolitical tensions, there's a lot of uncertainty in the market, and so that's why we're seeing a massive rally up when it comes to gold, and then we're starting to see price consolidating out. So that's pretty much it from the technical side. I will see you guys for the next weekly outlook. If you guys have any questions, feel free to reach out to me on Instagram at SharmaFX, and make sure that you guys are trading safe and you're trading reactions, not the actual headline release.